Hi, welcome back to my channel. We have a ton to talk about today. That's right, I hit $5,000 and I'm 20 years old. I'm super proud of that. Of course, my portfolio is down right now, but so is everyone's. We're going to talk about every stock I have and why Michael Burry thinks that we're in for a long ride with this whole pandemic. But first, I deposited $400, so my new total is $5,000 in the portfolio. With that $400 swing, I bought one more share of Microsoft at $184.44. Now I have 2 shares of Microsoft. And I did 2 Bitcoin purchases. The first of those Bitcoin purchases was $150 at 98.92.11, meaning my portfolio had approximately 1.12 Bitcoin at that point. And that final Bitcoin purchase was $80 or 0.008 Bitcoin at 99.4414. My new Bitcoin total is 0.1301 or 13% of a Bitcoin. That's great. On the day, we can see didn't perform great, but not horribly. On the week, down $120. On the month, up $190. On 3 months, still down 14%. Over the past year, down about 7%, and all-time now down about 7% as well. But what does Michael Burry have to say about this pandemic? That's right. Michael Burry says it's criminally unjust. He believes that what's happening right now is somewhat reminiscent of what happened in 2008. The bigger problem is that the government is mandating these lockdowns, and it's created a lot of problems. So here we can see Michael Burry, the doctor turned investor who famously bet against mortgage securities before the 2008 financial crisis, has taken to Twitter with a controversial message. Lockdowns intended to contain the coronavirus pandemic are worse than the disease itself. So it says government-directed shutdowns in the U.S., which led to millions of job losses and may trigger one of the country's deepest ever economic contractions, aren't necessary to contain the epidemic and have disproportionately hurt low-income families and minorities, Burry argued in a series of tweets over the past 2 weeks. Granted, this article is about a month old, but I still thought it was important, and I think now when we're looking for guidance, he's definitely somebody to talk to and sort of learn from. He also said some controversial treatments for COVID-19. We'll skip those because, again, they're controversial and it's not pertinent to what we're talking about today. So here they give him a little backstory. He earned his MD at Vanderbilt and became a professional investor. Since The Big Short, Burry's kept a low profile. He started sharing his views more widely last year to warn of a central bank-fueled bubble in passive investment products. He's now focused on the outbreak that shuttered economies, killed almost 75,000 people worldwide, and changed how millions of people live and work. Clearly, that number has gone up a lot since then, but I still think this is applicable. Here it says, universal stay-at-home is the most devastating economic force in modern history, and it's man-made. It very suddenly reverses the gains of underprivileged groups, kills and creates drug addicts, beats and terrorizes women and children in violent, now jobless households, and more. It bleeds deep anguish and suicide. Burry, whose utterances are closely watched by the financial community, began tweeting on March 23rd, describing his handle as the real personal account of the real weird one from the book and movie. But here it says, Burry has taken on medical policymakers in tweets regarding the illness itself, saying coronavirus infections can be managed through common sense measures like increased hand washing and broader testing without forcing everyone to stay home. He's also advocating for wider use of chloroquine and hydroxychloroquine to treat those who are infected. Donald Trump has called the latter drug a game changer in the fight against COVID-19, but critics in the scientific community have urged caution, saying it isn't fully tested or approved. Again, a lot of this information is a little bit old because it's over a month old now, but like I said, I think it's still important and definitely interesting to hear his input. But the big news here is $5,000 on my portfolio, so we're going to go into each and every single one of my stocks and talk about why I like them. As always, don't forget to like the video, subscribe to the channel, and comment down below what you want to see next. I'm coming up on 100 subscribers and couldn't be more grateful. First, we have PowerShares S&P 500 or SPHD. This is an ETF, of course. I have 16 shares, makes up about 10% of my portfolio. Total return is down $140. This pays a monthly dividend. Not super happy with the performance. At the same time, it is down pretty standard with the market, and I'm looking to hold this one. Next up, we have VTI, or Vanguard Total Stock Market ETF. This one's trading for about 141 right now. I have 3 shares. Total return is minus $22, but this pays a quarterly dividend, and I'm pretty okay with this one. On the last month, we can see it is up a tiny bit. Over the last 3 months, it's still down 17%, but when we zoom out to 5 years, we can see pretty consistent track record in terms of growth, the large drop-off, and starting to recover. So I'm happy with this one. As I mentioned, I purchased another share of Microsoft. I'm now up to 2 here. Total return is up $50, the vast majority of that being the first share which I purchased for about $120 last year. Let me know what you think about this, if I should continue to buy more. It's on the upper end of my price range, but I really like Microsoft right now. For the past month, up 6%. For the past year, up 45%, and 5 years, we can see up 280% with those beautiful tweaked Robinhood graphics. And my fourth largest holding is Vivint Solar. Of course, I got 50 shares here. Total return is minus $45, but of course, this one is up and down a ton. As we can see, down 6.5% today, and then up 1% after market, down about 10% on the week. Over the past 3 months, down 47%, and over the past 5 years, down 60%. I've talked about this many times, large drop off. And a gradual gain. This one's all over the place. I've talked about purchasing Enphase Energy or maybe some other ones. So let me know what you think I should do with Vivint Solar. Should I sell it? Should I hold it? Should I buy more shares? One of my largest holdings is Coca-Cola. I'm looking to increase this one both because of the price point and the consistent dividend here. We have a dividend king. So I have 6 shares. Average cost is $54.71. Total return is minus $64. Over the last month, we can see they've struggled mightily, and I've talked about this in other videos. Part of the problem is that with movie theaters and restaurants being closed, they've seen a large dip in sales. That being said, grocery stores and essential businesses are still carrying Coca-Cola products, and people are still buying them. The trick for them is going to be stabilizing within the next year. Over the past month, down 8%, but when we zoom out to the year, we can see they're only down about 9%. And that was up as high as about 24% growth before this drop off. And over the past 5 years, still up 7.4% with a great dividend history. Next, we have one of the newer purchases in my portfolio. I have 5 shares of Realty Income. This one is a REIT. And of course, REITs have been hit very hard because people are struggling to pay rents, both businesses and people themselves. So total return down $40 on those 5 shares, or 14%. Over the past month, we can see down about 11%. Over the past year, down 26%, and over the past 5 years, we can see small growth. I like this one again because of the monthly dividend. That is a cornerstone of my portfolio, so let me know what you think. Should I continue to purchase these REITs while they're down? Should I drop them? I'm not totally sure what to do, and I'd love to hear your input. Getting into some of my smaller purchases and smaller holdings, we have AT&T. We have 6 shares here. Total return is now down $40. I do own about $200 worth of AT&T, or rather I purchased $200 worth, now worth about $170. So down 2.5% today. Over the last month, down 8%. Over the past year, down 8%. And over the past 5 years, down 15 to 16%. We can see they were sort of in this upward swing and then fell off. The reason I like AT&T, again, very strong dividend here, great dividend history, as well as the advent of 5G technology. AT&T, of course, being the second largest cell phone provider in the US behind AT&T. Everything that I've read said that this truly is a hold stock right now. As we can see, 63% hold rating on Robinhood, but I'd love to hear your input. Next, we have Agilent trading for about $80. I have 2 shares of that. Average cost was only about $72. Now, the interesting thing about Agilent is that they are technology and R&D. That industry has been hit hard in some companies, and others have done just fine. So total return is up $17 here. And if we zoom out, we can see that they haven't struggled a whole lot. So up 4% on the month. Over the last 3 months, only down 6%. On the year, still up 8%. And over the last 5 years, up 89%. Decent dividend here, but again, strong earnings. Company that I'm pretty confident in, 53% buy rating on Robinhood. So moving forward, I think this could be another one that I continue to slowly increase my shares. Pfizer's been a little bit of a troublesome stock for me. The health industry as a whole has struggled, specifically in the pharmaceutical industry. I am down $13 on this all time. Again, a decent dividend here over the last month. We can see they're up. When we zoom out to the year, we can see this is coming off of a large drop-off and then certainly coming back. So 8% on the year, and over the past 5 years, only up 9%. I've talked about dropping this one, purchasing more. Not sure exactly what I want to do with it at the moment. Logitech's a very interesting stock to me because I have not purchased very much recently, and it's a company that I definitely should. They only pay a single yearly dividend, and I believe that's in July or August. Total return is up $43. Average cost was only down there at $39, and it's trading for $53. With people being home, these technology and consumer-based companies have done extremely well. So up 17% on the month. Over the last year, up 42%, even with these struggles, and up 255% over the last 5 years. I will be purchasing more Logitech, but of course, I can only buy so much every week. But I will definitely continue to buy more of Logitech. Let me know if you think this is a good move or not. Sony's another interesting one. I'm only up $14 on this one all time. They have been a little bit higher, but of course I am making money on this one, which is good. And of course I think the PlayStation 5 coming out this fall could be a big turnaround for them. So over the last month, only up 3%. Over the past 3 months, down 9%. Over the last year, up 30%. And over the past 5 years, up 103%. So we have solid earnings here, great track record, decent dividend, high buy rating. And of course, I am pretty high on Sony because of the release of the PlayStation 5 coming this fall. I haven't heard of that falling back due to any pandemic-related supply chain issues, but if you have, let me know. Next, we have Walmart trading for $124, up $5 on this one all time. I've made numerous videos talking about why I like Walmart and why I think they'll be successful moving forward. 73% buy rating. When we zoom out to the year, we can see up 24%, and over the past 5 years, up 58%. I really like this one, and like I said, I'm going to continue buying. And Verite is my other REIT, down $80 on this one all time. I believe it's my worst performing one at the moment. Strong dividend here, a consistent dividend. They're not going to change it, which means that when the stock drops in value, of course, that yield is going to increase. But if it's going to drop 45%, you're not going to make any money. So I'm going to hold off on purchasing this one for a little bit. But let me know what you think. 67% hold rating on Robinhood, down 12% on the month. 52% over the last 3 months, 45% on the year, and over the past 5 years, down 45%. Not good at all. This is actually my newest holding. This is JNK. This is a bond ETF. The reason I like this one is it's very consistent. We can see total return is only down 9 cents or 0.09%. Average cost, only the one share, 97.48, and my equity is 97.39. So over the last month, we can see down 4%. Over the past year down 9%, and over the past 5 years down 18%. Not great performance, but it's a bond, which means it's going to be more consistent. One of my smallest holdings is Charles Schwab. Of course, they have struggled, down $20 on all time on this one, or 23%. Only have 2 shares here. I may continue to buy. 50% buy rating on Robinhood. Over the last month, down 7%. Over the last year, down 24%, and over the past 5 years, up 6%. Definitely an interesting one, and something I'm going to continue to watch before I make a decision on whether to buy. And one of my smallest holdings here is KeyBank. I have 6 shares now. Total return is minus $36 or down 38%. Banks have struggled especially, and this one has a hold rating on Robinhood. As I said, 975, which is 50% less than it was trading 3 months ago. Over the past year, down 41%, and over the past 5 years now, down 33%. Not good, but again, those banks have struggled, and this one does pay a decent dividend. I think as this pandemic sort of unfolds, I'll have a better idea of what I want to do with my portfolio. Next up is one of my favorites, Penn National Gaming, trading for $17.14 right now. Total return is down $5.77 on this, not a huge deal at all. It is frustrating, but again, with no sports being played right now and casinos being closed, Penn's going to struggle. So over the past month, we can see up 10% actually. When we zoom out to the last year, we can see they're down 13%. They peaked here after the acquisition of Barstool Sports at $38 and bottomed out here at $4.52. So definitely all over the place. No dividend with Penn yet. I think that could happen in the future, but certainly not in the near future. 77% buy rating on Robinhood, which is good to see. And of course, I love Barstool Sports, and I'll continue to buy this one. I have 4 shares right now. I'm shooting for somewhere between 10 and 15 by the end of the year. And my second largest stock holding here is Four Corners Property Trust, my last REIT, down 41% on this all time, or $24. Average cost was $29.23 on those 2 shares. Over the past month, down 22%. Over the past year, down 41%, and over the past 5 years, up 52%, actually. Not sure what I want to do with this. I'm leaning towards selling right now, but of course, I'm not sold on what I want to do yet. I will make sure to keep you updated on that. And my smallest stock holding right now is Corning. I have 2 shares for $19.82. Meaning my total equity is $39.64. Total return is down $18.23 or 32% on this one. They have struggled. Smartphone manufacturers are struggling, and this is it is what it is. I can't do a whole lot about it. Over the past month, down 6%. Over the past year, down 33%. And over the past 5 years, now down 6%. Corning is definitely a sellable stock for me. I'm looking at selling it currently. At the same time, there could be recovery in sort of the manufacturing and smartphone space. We'll just have to wait to see. And last but not least, of course, we have to talk about Bitcoin. The halving has occurred. My total return is now up $36. And as I mentioned earlier, my total quantity is 0.1300887, or just over 13% of the Bitcoin. I'm very happy with this. There have been very mixed results with the halving. It's been pretty stagnant, which analysts did not predict. So over the past month, we can see up 36%, but over the past week, only up about 1%. 3 months, down 9%. Over the past year, up 20%. And over the 5-year span, now up 3,800%. As I continue to say with Bitcoin, I think this is a long game, and I think I'm just gonna have to hold it for as long as possible. That being said, it does get frustrating when it's up and down all day long, especially because my equity is now $1,200. It's a lot of money. Clearly do the math. It makes up 26% of my portfolio, which is enormous. I'm looking for this to have big gains in the future, and I'm very optimistic about Bitcoin. Thank you for making it to the end of my video. $5,000 is huge for me. Be back next week. I'll have a new video, and I'll see you then. Thanks.